all you need to know about making money in DeFi. The crypto market can be intimidating, especially with the amount of conflicting information out there. And since DeFi is a relatively new concept, this means it's constantly reinventing itself, making it all the more confusing. DeFi can benefit its investors because innovations and new concepts are being made daily. It's been taking Web3 by storm, offering unique ways to double or triple your assets through very high APYs. In this video, we'll explore the world of decentralized finance, discover how anyone can make money in this space, and how to get the most out of your investments. And for the best and latest blockchain technologies, crypto, and finance videos, make sure you subscribe to this channel and hit the bell icon to be the first to get the latest updates and news. So, what is DeFi exactly? DeFi stands for Decentralized Finance, meaning that the financial services are carried out on a blockchain instead of through a brokerage or bank. In today's financial world, financial institutions act as guarantors for any transaction. This gives them power over your assets. Decentralized finances are services with no central authority controlling them. They allow for peer-to-peer cryptocurrency transactions with no middleman. It's the ultimate merger between traditional banking services and blockchain technology. DeFi does what it does by taking traditional financial system elements and replacing the middleman with a smart contract system. This means that DeFi needs decentralized infrastructure to operate, like the blockchain. About 96% of these DeFi protocols run on Ethereum, although a small number have migrated to competing blockchains because of the difference in the speed of these transactions and gas fees. Decentralized exchanges reduces the risk of fraud, and this method is far safer since no security breach is possible. Some DeFi projects have KYC, or Know Your Customer, which requires your identity for all transactions and can prevent price manipulation or fake trading wallets. The main goal of DeFi is to utilize blockchain technology to remove banks and other third parties from financial restrictions. This empowers users to perform independent and private transactions without the interference of any financial institutions. How can anyone make money with DeFi? Using DeFi, anyone can invest, lend, and borrow as they would with fiat money, while also creating new job opportunities. In this section, we'll discuss these opportunities and different ways to grow your money passively. As DeFi is changing how financial institutions function, you can use the platform in the same way to maximize your profit. The only difference is that DeFi doesn't rely on centralized financial institutions, and all transactions are stored on the blockchain. DeFi is one of the best ways to earn a passive income in 2022, and here are 3 ways to make money on DeFi platforms. Number 1. Staking. Staking tokens on DeFi platforms is like having a savings account in a bank, but there are generally much better returns. You stake a particular quantity of coins for some time and get coins as a reward. The blockchain provides these benefits, which validate transactions using your staked coins. By staking more coins, you can receive bigger rewards. Some cryptocurrencies, such as ETH, have a staking minimum. However, some crypto exchanges also offer staking pools that let you invest with lower amounts. Number 2. Providing liquidity. Just like staking, to provide liquidity, you place tokens in a liquidity pool and get liquidity pool currencies in exchange for facilitating token exchanges. The more tokens you contribute, the greater the benefits. Number 3. Lending. Lending money is the most straightforward way to make passive income using DeFi. DeFi's lending is unique because you lock the assets inside a smart contract that selects a borrower for you. You may access your assets and profits when they repay the loan with interest. Number 4. Yield farming. Yield farming is using the tokens you earn from being a liquidity provider on a yield farm. A yield farm works similarly to a smart contract in that so long as you stake your tokens on the platform, you can earn more of the same tokens as time passes. They are essentially a lending platform that uses your tokens to lend to borrowers. In exchange, you get rewarded with additional tokens. The concept of yield farming is similar to time deposits for traditional fiat money, with the only difference being that there can be high rewards in yield farming if you're willing to take high risks. How to get the most out of your DeFi investments. Liquidity mining, staking, and yield farming provide excellent options for you to put your digital assets to work. While these methods are not without risk, there is rarely an asset class that comes with no risk. Liquidity plays an integral role in DeFi, and projects continue to offer great rewards for users that provide liquidity. Getting in at the early stages is key to growing your slice of the proverbial pie, which in turn can lead to more investment opportunities and better yields down the road. One of your favorite DeFi projects is Safu, and you can check the Safu video on our channel to get a better idea. Now, let's cover some DeFi advantages. Traditional banks are bureaucratic, expensive to run, take too long to process transactions, and sometimes they exclude many people from the financial system due to their strict requirements. DeFi offers many compelling use cases, many of which are beyond reach of conventional fiat-based financial systems. Here are 8 principal benefits of DeFi. Number 1. DeFi is permissionless and all-inclusive, so anyone with a DeFi wallet and an internet connection can access it. Number 2. Because DeFi transactions occur in real time, currency rates are constantly updated. Number 3. Users are responsible for their assets, lowering the possibility of large-scale data breaches. Number 4. The blockchain ensures that DeFi data cannot be tampered with. Number 5. The blockchain records all DeFi transactions, providing transparency. Number 6. Users can retain custody of their assets using non-custodial crypto wallets or smart contract-based escrow. Number 7. Many DeFi protocols are open source. Ethereum and other projects are developed with open source code that anyone can access, audit, and improve. Without permission, developers may quickly integrate various DeFi apps built on open source technology to build new financial products and services. Number 8. DeFi protocol smart contracts are very adaptable and can execute complicated tasks. Finally, let's see the difference between centralized exchange, CEX, and decentralized exchange, DEX. The centralized exchange operates similarly to a standard brokerage used to trade stocks, etc. A brokerage uses a centralized order book system as an intermediary between two traders. When one trader wants to buy an asset at a specific price, the brokerage finds a different trader that is willing to sell the same asset at the same price. The trade requires the two sides to agree to execute the transaction. The trade will fail to execute if the system cannot find a counterpart at a specific price. A decentralized exchange differs because instead of an order book, most DEXs use an automated market-making AMM system. When a user wants to trade, the AMM pulls the asset from a liquidity pool instead of a third-party counterparty. This allows the trade to execute immediately as the liquidity pool acts as the trader's counterparty. Thank you for taking the time to watch this video. Don't forget to smash that like button and subscribe to be the first to watch the following videos and for more blockchain, crypto, Web3, NFT, and finance updates and news.